Hey, this is Cedric Youngelman, your host of the Bitcoin Matrix podcast. Thank you so much for checking out my show, where we have philosophical conversations about the economic, societal, and cultural implications of Bitcoin and the future of money. Please make sure that you're subscribed to the Bitcoin Matrix. And if you're watching this on YouTube, like the video so that more people see it, and hit that notifications button so that you don't miss out on any new content. This episode with Lawrence Lepard about sound money is brought to you by River Financial. I'm able to produce this show in part thanks to my sponsors, and I'm very selective about who I work with and put in front of you. New year equals new goals. Start 2023 by setting up zero-fee DCA with River and track your Bitcoin performance throughout the entire year. I love River because they are a Bitcoin-only company, and they make it simple to leave the next generation better off than our own. To get started and find out for yourself, use the link in the show notes and get up to $10,000 free when you buy Bitcoin and miners at river.com. Then get your sats off your exchange. My favorite hardware wallet is the Cold Card from CoinKite. It's definitely worth learning how to use it. You can get a 5% discount by using the referral link in the show notes. If you're challenging the traditional status quo, then why are you still paying expensive insurance premiums? Experience the freedom and affordability of cash payments and community-funded healthcare with Crowd Health. Use promo code MATRIX during sign-up for a special discounted subscription offer. Check out the links in the show notes for more information. Bitcoin 2023 will be back in Miami Beach one more time. Education, celebration, and hyper-Bitcoinization will once again be on the agenda. Join us May 18th to 20th. Use the code MATRIX for 15% off your tickets. And now, let's enter the Bitcoin Matrix podcast with Lawrence Lepard.
What is real? How do you define real?
You can't jump into cash. Cash is trash. What do? You get out.
Lawrence Lepard founded Equity Management Associates in 2006. EMA is an equity investment management firm investing in growing private and public companies around the world. Since 2008, EMA is focused on investing in companies which mine the monetary metals, gold, and silver. He has been a frequent guest of many media outlets, including Bloomberg Television, for his expertise on the monetary metals market. The competitive CrossFit and Masters athlete and former pilot earned his MBA from Harvard and BA in economics from Colgate. Lawrence Lepard, welcome to the Bitcoin Matrix podcast. How are you?
Thank you very much. Very nice to have you on your show, Cedric. I'm looking forward to this.
Yeah, I'm really excited to chat. I've been definitely seeing you on Twitter for a while, and I think I saw you in person a couple of times at BitBlock Boom. I didn't get a chance to introduce myself.
Yeah, I saw you there too. We didn't chat, but yeah, I saw you.
Yeah, so I'm excited to chat now. I'd love to hear a bit about your background, even what your experience at Colgate was like and Harvard.
Sure. Yeah, well, before that, I mean, I grew up in Ann Arbor, Michigan, just to kind of go back to the very beginning. So Midwestern, and my small business family. My father had retail operations in Ann Arbor, in and around Ann Arbor, and just went to public high school and played sports, and got out of high school and was kind of like, what am I going to do next? And obviously go to college, and I was kind of interested in engine school, and I was kind of interested in finance and business, and thought maybe I'd ultimately go into my father's business. My father said, no, you don't want to really be a retailer. What you want to do is you want to get into computers. So he very intelligently, this is 1974 or 5, he very intelligently gave me this book called, I think it was called The Micro Millennium, but it was a book talking about, the microprocessor had just kind of been developed by Intel, and, IBM was running their big, punch card 360s. And what he intelligently saw was that, technology and computers, the microprocessor, were going to kind of change the world. And he said, look, if I were a smart guy and I were young and I were in your shoes, what I would do is get into something related to computers. And so I kind of pondered engine school, and then I thought, I'm not sure. I wasn't that great at math, so maybe I ought to get a liberal arts degree. So I went to Colgate and studied economics, and in the process of that, kind of got very interested in business and investing and finance and things related to kind of the analytical side of business. And so I took an economics degree, and somewhere along the line there, I think I read some stories about Warren Buffett and some of the great investors, and it occurred to me that what they did, I mean, if you kind of think about what I was all about, what I really enjoy figuring shit out. I mean, it's kind of like my highest and best use, I think. I mean, it's not like I'm, socially gifted, or, a lot of people have a lot of different skills. I think kind of probably my best skill is figuring shit out, and so I like puzzles, I like problems, I like taking apart lawnmowers, I like just understanding how stuff works. And so what I kind of did was I brought that mindset to business and the economy, and what was going on there in Wall Street and investing. And my grandfather's been an investor and been active in that kind of area. And so all of that piqued my interest in, all right, I think I want to try and be in a business where I get paid to figure shit out. And then I mapped that against my father saying, hey, if I were looking for, if you want to do well in business, you want to get in a business that's growing. And if I were looking for a growing area today, if there were anything I could tell you, son, it'd be, look at computers. And so I kind of, all right, so I kind of listened to both of those thoughts, and went and got my economics degree, and that led to going to work on Wall Street for a couple of years. And I worked at a big investment bank in the merger and acquisition group. And this was when Ivan Boesky was doing his insider trading thing. And the guy next to me ended up going to jail. And it was a guy named Dennis Levine. And it was a very interesting experience. And this was truly old Wall Street. I mean, this isn't the way it is today, but even then I could kind of see some of the corruption and, the insider trading and all the stuff that was going on. I mean, Boesky got caught, but, almost everyone was doing it. And so I did that for a couple of years, and this is interesting, but I don't want to be a Wall Street guy. I didn't really like it. They were kind of arrogant, and they were always just, it was very transaction driven. There were no morals and no ethics in it. And, one side of my family was deeply religious. My grandmother's side was Mennonite. And so I had kind of this strong religious, do what's right, treat people fairly kind of core belief system coming from one side of my family. And so, I could kind of just see, these guys on Wall Street, these guys are sleazeballs. So anyway, so I got into Harvard Business School, and I went up there and I studied it. And that was where it really became clear to me that what I wanted to do was investing, because it was analytical. You had to figure shit out, and you got paid for using your head to figure shit out. And it was complicated shit, but you did it. And then it also became clear to me that, all right, if I'm going to be in investing, that's when I mapped back to what my father had told me. And, the IBM PC came out right when I went to business school in 1981. It had a floppy drive, and it cost $5,000, which was a lot of money in 1981. And everyone's like, well, what's this going to get used for? And, Ken Olson, who was the head of DEC, said, there'll never be a demand for that, and blah, blah, blah. But anyway, so I started trying to figure out, how do I invest in technology? And so, and then somebody said, well, you should look at venture capital. And so, and at that time, there were probably 5 venture firms in the country. Kleiner Perkins was the biggest one, and there were a few others. And so I applied at all those firms. I couldn't really get a job, but it turned out there was a bank in the Midwest. And we were talking earlier, you said you were from Chicago, called Continental Illinois Bank. And they had a venture capital group. And the guy there who ran it was a guy named John Hines. And he'd gone to Stanford with all the Kleiner guys, and they'd brought him into all these deals. So he'd done the Apple deal. So he was kind of a rock star. And, as a result of that, I ended up meeting Steve Jobs and so on and so forth. And this is back in the, this is now 83-ish kind of time frame. And, I was learning how to do the venture capital business at a bank. It wasn't the same as at a private partnership, but, and this is, again, ancient history, probably well before most listeners' time, but the Continental Illinois Bank went bankrupt. It was one of the first bailouts, actually. After the country, the government bailed out the Penn Squared Bank earlier in the late 70s. And then when Continental Illinois went bankrupt on the oil boom, 81, 82, there was a group called Penn Square, I think it was the Penn Squared Bank. I think that's right. That got them upside down, and the government had to step in and take over the Continental Bank. Well, as you might imagine, that meant no more venture capital at Continental. And so I was fortunate, though, I'd gotten into the industry, and I got picked off, and a couple of guys in Boston that I'd met when I was interviewing said, we're starting a new firm. We're going to build this thing up. why don't you come join us? And that was something called Summit Partners. And so I joined them, and I was with them for 7 years and became the third or fourth partner there, depending how you count it. And we had a very good run and did some great stuff. Eventually, I got to the point where, on a personality and ethics basis, I didn't want to be with those guys either, and so I left and went and found another partner down in New Jersey at something called Geo Capital, and we basically did technology deals, software, hardware, graphics cards, floppy drives, hard drive. I mean, you name it. Applications. Local area networks, which were kind of the predecessor to the internet. And then what kind of became, the defining moment of my career, I guess I would say, was, in '93, a guy gave me a business card with an internet address on it. Said, send me that information to my internet address. I said, what the hell's that? He said, well, it's this network of computers and they're hooked up. And he had a CompuServe address. And he said, you got to get a modem, you got to dial up this, that. And it was 1993, remember? And I said, what is this? And he said, well, it's really, imagine if you had Novell and you could hook up every computer in the world and send them an electronic message. I said, yeah. And he said, that's what the internet is. I was like, holy shit, that's a big deal. That's really powerful. So I went back to my office. I grabbed all the kids who worked for me. I said, we got to go find this internet. We got to find out where it is. Okay, and we got to invest in it. And so we just went out and started investing in internet companies. And as you might imagine, that worked extremely well in many cases, not all. We did some stupid shit too, but we had a fund that was a 10x your money kind of thing, and that kind of defined my career. I had the first internet IPO in a company called Netcom, which was a dial-up service provider out in San Jose, and we invested in a lot of the big internet names that went on to be quite famous. 2000 rolled around, and we could see it was a bubble. We were trying to raise another fund. All the investors said, yeah, you got to go do more internet. We had 400 million committed to our fund, and I had two guys out of Harvard Business School working for me, and they'd been there about 4 years. And they said, if you're going to do it, all our friends are getting rich. If you're going to do another fund, you and the other guy, there was a guy who founded the place that I joined, Geo Capital, and he and I were the two senior partners. He owned 55%, I had 45. And these two young guys said, we're not going to go forward unless you give us half the fund. I mean, my partner had been doing it for 15 years and I've been doing it for 10. And we kind of looked at them like, what are you, out of your minds? But this was the kind of view of Harvard Business School grads, in the technology, in the dot-com boom. And then the investors said to us, hey guys, we're not going to give you the 400 million unless you do only internet, because that's really where it's at. And you've made a ton of money doing that. You're really good at that. We want you to do that. So my partner and I looked at each other and said, well, look, and we could take this 400 million, we could make 2% in 20, but these guys are telling us to invest in something that we now believe is a bubble and we don't want to invest in. And we got these two kids who don't know what the fuck they're doing, who want half of our fund. And so, we quit. We said, you know what? Here's your $400 million back. You two guys, you're fired. We're going to wind this thing down. And I moved from New Jersey back up to Boston, which is where my wife's family was and where I wanted to be. And so I kind of semi-retired. This is 2003. And I'd made some money. And so I started managing my own money. And then that grew into EMA and the fund that we have now. And for the first 3 years of that, from 06 to kind of 08, I guess it's almost 5 years, but yeah, no, 2 years. Well, I managed the money personally, my own money personally, not in a fund structure. And then we made a fund structure. And for a couple of years, I did what I call growth at a reasonable price. And I focused on India. And I found some guys in India. I went over and studied India. And we were finding, cell phone service providers that were growing 40% a year and trading at 3 times cash flow. So we did that, and that worked really well for a few years. And then the GFC hit. And when the GFC hit, that was kind of like, everyone says, how did you get radicalized for sound money and gold and Bitcoin? And it was the GFC. I don't know where you were, Cedric, when that happened in your career, but that was a defining moment, right? I mean, and I had seen the housing bubble, and I knew there was a bubble. And at the time when it hit, I was half long Indian stocks and half short U.S. financials in the fund. And I was, the Indian stocks were kind of going down, not, we were at the tail end of that run, and the financials were just about to crater, and I was short Lehman, Fannie, Freddie, Bear Stearns before it went bankrupt, MBIA, you name it. I was short all of them. And so they started failing, and I was making a ton of money on paper. And then September that year hit, and they changed the rules. As you'll recall, they came out and they said, you can't short sell the financials, right? I mean, the SEC banned it. And so I went from having a year where I would have been up 40 or 50% to having a year where I ended up down the year 6% because of what I lost in India. And it was dreadful, and it was an example to me of just how corrupt the system was and how broken the system was. I kind of knew this beforehand, but it really hit me in the face. And then related to that, as we all know, the GFC hit, and they started, they dropped interest rates down to zero. I mean, they'd kind of done that before in 2000 when the dot-com bubble was. They took the rate down to 1. This time they took them to 0, and they started QE. And at that point in time, I said, all right, I get it. This money I have is not going to maintain its purchasing power because the government has clearly indicated that we're not dealing with a capitalistic system. This is socialism for the rich. And, it's rugged capitalism for everybody who had housing debt and, was working in the economy. I mean, my sister lost her house, et cetera, but it was socialism for all the banks. And, I mean, these guys running these banks, they should have been fired. They should have had new boards of directors. They should, et cetera. I mean, it just frosts my ass to see Lloyd Blankfein holding forth on Twitter about various subjects when, he would have been bankrupt. Goldman Sachs was effectively bankrupt and should have gone out of business in 2008, but they did not because of what the government did. And so this really made me angry. And I then realized that, so I was kind of morally outraged at the theft that was taking place and the way that the insiders controlled the rules of the game, the way they screwed me out of a 50% gain that was directly money out of my pocket personally and money out of my investors' pockets. And I said, all right, the only way to fight back against this is to get into sound money and a sound money alternative. Now, the white paper had been written. I wasn't aware of it. I had no clue it was there, although I had Ron Paul friends who were aware of it, but I wasn't paying attention to that. But it became very clear to me that when they were going to print money and debase the currency, the correct thing to do at that time was to invest in gold and silver because they represented non-state money that could not be printed. And so I thought to myself, all right, we're going to have a big bull market in gold and silver. And I know that I'm smart enough to know that you want to be in front of a macro trend. I mean, with my technology investing, I always thought I was in front of a macro trend, right? Technology was continually improving. It was changing the world. It was making things better. And, if you bought good companies at reasonable multiples, you could get growth and then you could get multiple expansion. And those two things were, to me, the best asymmetric bet in the investment market, right? And so what I realized, or what I believed at the time after the GFC was, all right, to get that same kind of asymmetry, I need to get a macro tailwind, money printing and inflation, leading to higher gold and silver prices. And then I just have to find the best companies. Problem is I didn't know anything about gold and silver mining. I had no clue about breaking rocks and how hard it is and all that kind of stuff. But that's okay. I found a guy who did. I gave him some money to manage. I said, look, I'll let you manage my money if I can look over your shoulder. He became a friend and he kind of taught me the business. And so I pivoted my fund. We got rid of all the Indian growth stocks and we moved into gold and silver mining exclusively. For the first couple of years, it worked great. I mean, 2009 and 2010, and my numbers, I was up like 30-40% a year each of those years. But then in 2011, and gold hit, by the way, in the beginning, gold began the 2000 timeframe. Gold was at $250 an ounce. The GFC, gold was $800 an ounce. At its peak in 2011, gold was $1,900 an ounce. And the gold stocks in that time frame had kind of done a 10-bagger. And I was around for the tail end of that run. And then, then it hit the wall and we had a major correction because, the money printing slowed down and they kind of got another credit bubble going as a result. And that's what we're now living in, which is kind of the ZERP driven credit expansion that, caused the stock market to recover. I mean, gold tends to be countercyclical with the stock market. When the stock market's doing well, it's a better investment than gold. And when the stock market's not doing well, gold is a good safe haven investment and it tends to do better. So in the case, when they put the ZERP policy in 2009 and it went till 2015, which in my opinion was a huge crime, they took away the upside in the gold market, and I endured a bunch of pretty rough years. And that's what actually drove me into CrossFit. I was having such a tough time with my business, and I was probably, and I'd been working kind of nonstop since I was in my mid-20s. I let all my athleticism go away. And I realized that, if I want to kind of stay in this. This is going to be a long fight. If I want to stay in this fight for the long run, I better get my ass in shape. I better get tough about this. And so I studied it, figured out, I went to a Navy school training camp and figured out, and they kind of showed me, look, CrossFit's the way to do this. It's the most extreme form of fitness you can do, and it really works, and it did. And so that's why I dove in there. So I'm kind of rambling on here, but I think that's kind of what you wanted was my background. And so since that point in time, I've managed this fund focused on gold and silver mining, but the Bitcoin piece comes in. I know you, in some of the comments on Twitter today, people said, don't let them talk about gold. I'm tired of fine, but you got to remember that, pre-2008, there was no Bitcoin. And so if you were I consider myself first and foremost to be a sound money advocate. I think that the problems that exist in our world and our society today all started in 1913 with the creation of the Federal Reserve, and credit expansion and credit cycles. It caused the Great Depression. It caused the bubble in 29, which caused the Great Depression, which cost my grandparents a lot of money and a lot of pain. And it's just continued since then. And, my belief is we're in a fourth turning. And until we solve this unsound money issue, we're going to continue having the same problem over and over again and wondering why the hell it's happening. Right. And so, the only way to protect against it for a long time was gold and silver, and other tangibles, real estate, et cetera, that would hold their value. You couldn't print them. But, Bitcoin was something new. And I had Ron Paul friends that kind of made me aware of it. I'd never focused on it. My initial reaction was, how can you have sound money on a computer? I know what computers are. I've been around since the beginning of the PC. And I don't know if some of your listeners aren't old enough, you probably are. But you remember how the IBM PC used to go blue screen on you? You'd be using a PC and then suddenly the whole screen would be blue. And I'm thinking to myself, that can't be money. There's just not enough stability in a computer network and a computer system to have it be money. Now, obviously, I didn't understand about hashing and, Merkle chains and all the other things that go into making, the blockchain and Bitcoin secure. And of course, a lot of them hadn't even been fully developed at the time. Adam Back was probably in high school, but the development of Bitcoin and the introduction of Bitcoin, kind of hit my radar screen in 2011 or 12, and I started trying to buy it. I was in the process of opening an account at Mt. Gox. Unfortunately, they failed right before I sent them my money. I was close. So unlike, Caitlin and some others who actually had their money there and lost it, I missed that one. But then I immediately, when Coinbase came out, and as you know, before Mt. Gox and Coinbase, the only way to get it was to, go to a cafe and, give somebody some money and they'd give you a paper wallet with, a couple of QR codes on it. And that seemed kind of dodgy. So, but, kudos to all the guys who understood it and did it. I have enormous respect for Max Kaiser and others who got it earlier. But I bought my first coins in 2013 and I've just kind of continued buying. And, I'm very much a believer in buy the dip. So I was a buyer at 17,000 in Thanksgiving of 2017. I paid, and I was like, this is really great. It's really working. And of course, then it went to 10 the next year and I doubled down. Then it went to 3,500. I doubled down again, and I was a buyer at 68,000 a year ago, but but on a dollar cost averaging basis now. Right. So I just got my Swan account. Every week I buy coins, some coins. So, and my fund has migrated into Bitcoin, not 100%. Not even an enormous percent, because in my view, it's got great optionality, great asymmetry, great upside. It will ultimately it is better than gold, and it will be better than gold. But the gotcha is that it's a lot more volatile than gold. And I've got investors who cannot tolerate a 70% drawdown. You're 70 years old, you can't have all your money in Bitcoin. You see it go down 70%, you're going to want to blow your brains out. So you're 30 years old and you got a long-term time perspective. Hey, save all your money in Bitcoin. That's probably what I would do if I was 30. So, so I balance the two. In my PA, it's about half and half. That's, half my money is my fund and half my money is in coins. And in the fund, it's more like, 85 gold and silver mining and 15 Bitcoin and Bitcoin related companies. So, but I fully expect that the Bitcoin could and will probably outperform the gold. It's the fastest horse in this race, no doubt. And that's really because of two things are going on. One thing is driving both of them, which is continued monetary debasement, which, as Foss says, really is just mathematical, and it's almost a guarantee. I mean, I do say that if government ever got very responsible and started cutting costs and balancing their budget, I would question the thesis a little bit. But as we both know, that's a pretty long shot given the way our government systems are constructed. And so as a result of that, my view is you want to own both of these things, and whatever balance of the two is appropriate for your risk tolerance. If you're young and you have a lot of risk tolerance, you don't care, then you want all Bitcoin, no gold. I think, all gold holders, I've tried to convince them to buy some Bitcoin because of the optionality. I mean, they'll both go up as money gets debased, but Bitcoin also has that adoption curve that we all know about, right? And so, we're kind of at that Gladwell 10% tipping point where in the next 14 years, the first 14 years, we got to 10%. The next 14 years, we're probably going to 90%. And, that's 8 billion people chasing after a fixed supply of coins. And it's interesting also, I made this point, I try and make this point to people, and it, every commodity, Bitcoin's a commodity, the SEC says it is. I mean, one coin's the same as the other. Every other commodity in the world, the supply responds to a higher price. I can guarantee you if gold goes to $10,000 an ounce, we're going to mine a lot more gold. There's just no doubt. I mean, mines are economic at 1,800, very economic. And at 10,000, they'd be insanely economic. And so supply will increase. Well, 21 million is 21 million. The supply of this thing is not going to increase, full stop. So as the price goes higher, it's going to consume the world. I mean, I think Saylor's got it right. So it to me, it's just an incredible opportunity. It's the most asymmetric bet that's ever existed in history. And I find it shocking that a lot of intelligent investment people don't get it. But it's because they're recency bias and looking backwards. They're just not open-minded enough to accept and understand what it is and recognize what it could be and probably will be. So that's a pretty long-winded answer to your first question. when I stop there, and then you figure out where you want me to go next, and I'll give you another long-winded answer.
I hope you keep giving me answers like that. That was great. I loved it. A lot came to mind there. First thing, as a native New Yorker, we moved here from Chicago to Sarasota, Florida, but I'm from New York. Just too proud to let that one go. But a lot came to mind there. Even before the great financial crisis, there was things like long-term capital market management, long-term capital management.
Oh, absolutely. Yeah.
Because you mentioned, politics, corruption, changing the rules. And I was actually, I think, a sophomore or junior in college, undergrad, when that happened. Yeah. And it was shocking to me. And I already felt like the system is rigged. And then I got my master's in accounting, and I learned about how you can do a lot with accounting and camouflage things, or, and accounting rules can change, or there could be preferential treatment, or you could bend the rules and pay fines later on. But something that really also stood out, though, is, your father gave great advice around computers, and you got involved in early computing, investing early, and then even the internet and sound money and metals and all the cycles here throughout all the politics, corruption, sticking to the analysis, sticking to solving the puzzles. But what is the investor mindset over all these cycles in terms of waking up every day and having a low time preference at what you're looking at, what you're analyzing, where to place your bets, not to get too excited about something that comes your way?
Well, I think, yeah, I mean, it's interesting. LTCM, I remember LTCM like it was yesterday, just like it was yesterday. I mean, I was short stocks in August of that year. Russia blew up, LTCM blew up, and of course they came in and saved it. And Bear Stearns didn't participate, which is why they killed Bear Stearns later on. Right, as you know.
Right.
I think the thing that's interesting, and that I know has benefited me, I'm sure it's benefited you too, is when you read the history of these markets, and it really is kind of true that there is nothing new under the sun. Do you know what I mean? And you read Mackay, and Extraordinary Popular Delusions, and you read about the Great Depression, and you read about the Wall Street, the Roaring '20s. And what happened there, and I heard about that from my grandfather. And you kind of get a sense that human psychology, humans. I mean, I part of my investment model is based on the fact that I think humans tend to herd. I mean, and this was adaptive, right? I mean, you're out on the plains and there's something coming to get you, some animal or some tribe coming to get you, and a bunch of people say, hey, that's dangerous, let's all run this way. Well, if you didn't run that way, you were, so you tend to kind of, oh, everybody else is doing that's probably what I should do too, right? And I mean, and that recurs, that instinct, that natural human instinct recurs over and over again, right? And it occurred in the FANGs, it occurred in Kathy Wood's ARK fund, it occurred in Tesla, people, and because there are metrics one can use to value investments. You can look at the long scope of history and say, is this thing cheap or is it expensive relative to its history? I mean, even with Bitcoin, I like to use the Tipmeyer multiple, which you can find on Twitter, and it's nothing more than the current price of Bitcoin compared to the 200-day moving average. And if you go and you do it at Tipmeyer, multiple.com, whatever it is on Twitter, they tell you, there was a time recently where, the price of Bitcoin had been more expensive relative to the multiple, like 97% of the time. I mean, I can tell you, if you're buying something in the 3% of its cheapest ever history compared to a meaningful metric, guess what? You're probably buying it right. And by the way, when it was at 68, it was kind of at the other end. And you could probably, I was buying at 68. Because I just want more Bitcoin always. But the point is that, you can look at these things, you can study history. Let me give you another example. When I started in the investment business in 81 or 2, everybody and their brother thought inflation was going to go on forever. Gold had just had a fabulous run and was one of the best places to be. Oil had had a fabulous run, was one of the best places to be. Commodities were where you wanted to be, and bonds and stocks sucked. They absolutely sucked. Only an idiot would buy bonds and stocks in 81 to 84, okay? And a very smart guy who I knew, because his parents were friends of my grandparents, named Gary Schilling, basically made a fortune by buying the strips of the 30-year treasury when the 30-year treasury was yielding 10%. He made 10x his money by buying a zero, and because he could see that we had reached peak inflation and that what Volcker had done was going to bring those rates down, and we had 40 years of deflation. And I could see at the time, I was starting off in the investment on the long side in a venture capital framework, but I could see based on history that, stocks were really cheap. I'll never forget getting my bonus money in the early to mid 80s and looking at Microsoft after it had just come public, and it was trading at 14 times earnings. It was growing like 35% a year. And they had the leading system that had to be used on every single computer that wasn't an Apple computer, MS-DOS. And, the contract with IBM, blah, blah, blah. And it was like, holy shit, this is a no-brainer. Selling at a decent multiple and growing like crazy. And so, but, I also remember the time there were a lot of people saying, software, what's software? You can't touch it. It's not anything tangible. Software, it reminds me of Bitcoin, right? What the hell is software? It's a bunch of code. How can that have any value? Gold has value, oil has value, real estate has value, corn has value, but software can't have any value. And, I remember that was the prevalent thought on Wall Street in the early 80s. And of course, look at how software did from the early 80s to 2020, right? And so in turn, the prevalent thought a couple of years ago was stocks, particularly post ZERP and all the free money, stocks could never go down, and deflation was going to last forever. Inflation would never be seen again. And we had the magazine cover indicator, right? We all saw the Business Week is inflation is dead, and they had the dying dinosaur. Well, talk about ringing a bell. And so I would submit to you that what we're now in is at least a decade, perhaps more, that's going to be extremely inflationary. And we're only a couple of years into it. And so inflation suggests if we are in an inflationary decade, the inflationary, and I think it'll be bigger than the 70s, but let's just compare to the 70s. In the 70s, if you own bonds, you got killed because inflation ate you alive. in the 70s, if you owned stocks, you went sideways. You didn't lose money, but your opportunity cost was large because the stock market didn't go up at all from 1971 to the end of the decade. If you were in gold stocks or oil stocks, you compounded at 25, 30% a year all the way through the 70s because those two commodities went up substantially as a result of all the inflation. And that's what I think we're going to see again. That's where we are right now. Now, we're seeing inflation come down a little bit off of the boil because of all the things that, Jay Powell's doing. But, we'll get into where that's going to go in a minute. I mean, that can't last. But, my view is we're in, we saw peak deflation in March of 2020. I mean, oil traded at a negative value. Of course, it was just because it couldn't store it. But the point is, I think the 10-year got as low as 50 basis points. I mean, that's ridiculous. And that was all the end of peak deflation. I mean, and guys like Lacey Hunt and Steve Van Meter and all these other guys were out there saying, we're in a deflation war. And by the way, here we are a few years later, we've had a significant indication that the tide has turned and that we've got inflation. And yet the 5x5 inflation swap is still at 275. And Zoltan was out with a paper last night and said it's ridiculous. It's absolutely, we are not going, the markets, Cedric, my view is I've studied investing, I've been investing for my whole career, 40 plus years. The markets are always the best way to try and beat the market. And there are those who say it's efficient, you can't beat it. And by the way, that's another thing. I read Random Walk on Wall Street in college, and my immediate reaction was, this is bullshit. This is total fucking bullshit because, and he said, nobody can beat the markets. It's a random walk. And yet, well, then why does a Buffett exist? Do you know what I mean? Why do great investors invest? And they do. There are people who, it'd be like a monkey flipping tails or heads, 50 times in a row. You can't do it. And the way they do it is they think long term, and they think about the patterns, and they see how these patterns repeat themselves. So what I believe is we have now entered this inflationary decade, and we are not going back to a disinflationary decade. And the macro tailwind that you want to make sure you have at your back is investing with an inflationary mindset. And so that would suggest that commodities, Bitcoin, gold, and silver will all outperform regular stocks, and they'll way outperform bonds. Bonds are certificates of confiscation. Even today, 3 to 4% on the 10-year is against a 7% inflation rate. Really? In a 10-year time frame, you lose 40% of your purchasing power. Doesn't make any sense. But the market hasn't fully adjusted to that. Just as in 1983, the market hadn't fully adjusted to the fact that we were entering a period of deflation and growth in software companies, right? And so now, we've kind of got the opposite. And that's because it's another human trait, which is called recency bias, right? This has worked, therefore it will continue to work. And, probably 70 or 80% of the time, that's not a bad way to think, because a trend in motion tends to continue. But, all trends eventually do end and they reverse. And, I think we went just about, when you had, trillions of dollars of negative yielding debt, and interest rates pinned at zero for long periods of time, I think you got about as far as you could get out over the skis on the deflation trade. And I think, it's time for the inflation trade to come back with a vengeance. That's kind of how I see it.
Yeah, I think that's the way a lot of us see it. And in terms of this inflationary environment, though, I do want to talk about gold tonight.
Yeah, okay. Some people are going to get pissed off.
No, I'm not. We're not going to shy away from talking about gold here.
Okay.
And I've been thinking about this as I've been prepping for this conversation, because I'm not a gold guy.
Yep.
Because I was never a monetary metals guy. I grew up in a very inflationary environment, the very heavy equities, just in terms of the mindset. When 2008 came, I didn't have a lot of resources to defend. Right. So I wasn't thinking so much about moving to gold, or, I've never had a big gold position. Mm-hmm. So, and I think, but I've always thought about Trace Mayer and his thinking around gold, and how it's very primal, and in the culture of India, they pet their gold statue, and they want the gold to grow. And I like that mindset. Yeah. And one thing I took away from his conversation as well is I started measuring my net worth in dollars, gold, and Bitcoin.
Right.
And in his mindset, it's like you want to see them go up in all terms.
Yep.
Right. But you would think it would go down the most in Bitcoin because of the denominator going up the most. But
right.
So I've always thought that's a great exercise. But I also think, for a lot of people, like especially my mom and her generation, like she's into Bitcoin, but she's not going to be 100% into Bitcoin.
Right.
She couldn't deal with a 50 to 80, 90% drawdown.
Right.
It doesn't make sense, So I think gold has its place, it obviously has its place. And I think it's good to talk about this. So I want to understand gold a little better. From both, like when you look at, let's say you have a position of gold, you want to start a position of gold, or how do you think about like, not so much physical gold, but do you get into a gold ETF, mining stocks, and what is sort of,
well, let's go through all those things. I mean, that's so, look, the way I describe this, I've said this many times, gold is the original form of analog sound money. Okay. And it's not perfect, but it was kind of until Bitcoin was invented, it was as close to perfect as I think we could get. Exeter's pyramid, you couldn't print it. It's outside of the state. It's, final settlement, right? There's no credit involved. You got a gold coin, you possess it. Okay, fine. What do you buy? How do you go about gold? Let's talk about paper gold. Let's talk about ETFs, etc. And let's talk about gold having failed, because gold has failed. Okay. I mean, the state has been able to suppress the price of gold, enormously through the creation of derivatives and paper gold. Okay. I mean, there was a time, and these are mathematical calculations available to anybody, when we were still roughly on the gold standard. It wasn't perfect because U.S. citizens couldn't own it after Roosevelt grabbed it, and then there's a whole history here that take forever to go through. We don't need to do that. In 1971, you could take some of the monetary aggregates, M2, M1, whatever, and you could divide them by the gold that the United States claims to own. We think they might not, but they claim to own. And you'd come out, somewhere in the mid 60s, you would have come out in the $35 an ounce range, which is where it was fixed by diktat after Bretton Woods. Okay. So, and it wasn't exchangeable for US citizens, but it was exchangeable for foreign countries. So, we came out of World War II, and they knew they needed a new monetary system. And rather than try to return to a full gold standard, the US was rather crafty and said, well, let's go to a dollar standard backed by gold, because they knew that would give them power in terms of being able to print the gold, print money. And so we did. And of course, they abused that power pretty quickly. But the abuse didn't show up in a big way until the 60s, when we got into the Vietnam War and Johnson and others, went guns and butter, and we really started to run big deficits. And other countries said, hey, you know what? They're printing way too many dollars. These dollars aren't holding their value. We'll have our gold. Thank you very much. And so the US at one point had, I don't know, almost 50,000 tons of gold, and there was a huge gold drain. But anyway, back to the original part of the story. In 71, you could take the monetary aggregate, divide it by the gold we had, you came out close to $35 an ounce, which is the price it was set at. If you did that same thing today, what you would come to is gold should be at $80,000 an ounce. 80,000. Our monetary aggregate is divided by the gold we have. Right. 80,000 is a lot bigger than today. It closed around 1,800. Okay. 40x. That shows you how much money we printed. Okay. But the government knows that gold is, and has always known that gold is the canary in the coal mine. And so they have done everything they can, and there's a lot of evidence of this, and that's a long story too. They've done everything they can to suppress the gold price because they want to have a strong dollar. And really the other piece of this whole puzzle is oil. I mean, if you really think about what's money, I mean, money is, oil is kind of nature's money. It's energy, and Bitcoin is energy, and gold is energy, in the sense it takes energy to mine gold. And then once you've mined it, there's no additional energy, but you've got it. It takes energy to produce oil, and oil is pure energy in itself. And then it takes energy to produce Bitcoin. So the common denominator here is that money is energy, really. I mean, or I should say sound money is energy. The dollar is what they've been able to print, and what they have done is they've rigged the system to disguise the fact that they have massively debased the dollar over time, and that they will have to continue to massively debase the dollar for years and years. I mean, there's no way out of a credit-driven system like we have I mean, my Twitter, pinned tweet shows the growth of GDP and the growth of credit. And, credit is growing and debt growth is growing much more quickly than GDP. And it's GDP that provides the income to service the interest on the debt. And eventually at some point it breaks, right? And you're either going to have either the debt becomes worthless or you're going to have to inflate it away. And we're at that stage now. This is, as Luke Roman presciently pointed out, this is a sovereign debt crisis that looks very similar to the one that occurred in the teens and 20s. And we haven't had one for 100 years. No investor in their lifetime has seen this. So, and that's why it's so hard to navigate, and in fact, I feel very sorry for people who are in the stock market today because, I've seen bear markets, right? I've been investing in the stock market since 1980. And, from 2009 till, December of 2021, basically the right thing to do was to buy the dip, buy the fucking dip, and I mean, it worked over and over. And it worked in March of 2020. It can, buy the dip and they'll bring it back. And guess what? It's not going to work this time because the problem has gotten so big that they can't reinflate it, in my opinion. Now, there's some who think they can, and if they do reinflate it, we're going to have a crack up boom where, we'll be like Venezuela. Our stock market will go up, but only because inflation is crazy. I mean, the Weimar stock market went up too, but the currency was losing its value incredibly quickly. And so, that's kind of the story. But, gold was the canary. Bitcoin is becoming the new canary, and gold had a lot of problems with it, a lot of problems. I mean, all the central banks control it. It's hard to move around. They all lie about how much they have. There's no verifiability. I mean, the fact that, Bitcoin is triple entry accounting, it's a beautiful thing. Now, there is, a fly in this ointment, okay? And that is that there is, as we know, there's paper gold. There's also, sadly, there's paper Bitcoin, right? There are Bitcoin derivatives. There are Bitcoin futures. There are Bitcoin swaps. I mean, you go to Glassnode and you can see them. They're not nearly as large as the paper, gold market. I mean, we've those of us in the gold business who've been doing this for a long time, we're pretty convinced there are about 100 claims on an ounce of gold for every ounce that exists. So yeah, which really kind of says to you, this is kind of a game of musical chairs, where if everyone who thinks they own gold said, please give me the ounce, there wouldn't be enough ounces around. The price would have to go up a lot. And frankly, Bitcoin has some risk of that occurring, but I think it's lower because I think Bitcoin is moving so quickly and can blow out the people who are on the other side of that trade so much that they're not going to be as aggressive with it as they have been in the gold market. But I reserve judgment on that a little bit because, when you got derivatives going on, and this is one of the things, when we fix this system, when we're on, 20 years from now, 10 years from now, when we're on a Bitcoin standard and we fix the system, we're on a sound money standard, we need to go back to some kind of a Glass-Steagall law, which never should have been abandoned in the first place. We also need to ban derivatives outside their actual use for trading physical things. I mean, if a farmer producing corn wants to sell his corn forward and then produce the corn against it, fine. But you shouldn't be able, to have the whole world betting 100 times the amount of corn there is on the price of corn. You just shouldn't be able to do that, because the minute you put derivatives into the equation, you basically are saying whoever has the biggest balance sheet can win. Like they can outbluff you at the poker table because the other side doesn't have as much money. Right. Yeah, the other side doesn't have as much money. And the problem is, who has the biggest balance sheet? The United States government, because they got a printing press and they can print as much as they want. And so they've done that with gold, right? I mean, they use counts in the Cayman Islands. They use all kinds of things to basically take the other side of the trade and keep the price where they want to keep it. And I mean, this gets really deep and it's subtle. And you got to go to gata.org, gata.org, and you can read a lot of the history of it. But I mean, there are national security directives. I mean, the price of keeping the price of gold suppressed is probably as important as protecting the nuclear codes. Because if the dollar were to fail, that would really be a national security emergency, right? I mean, it would be. And so, you can bet that there are people in the Pentagon and other places who watch this stuff very carefully, very carefully. So, and by the way, they're watching Bitcoin. I mean, when Bitcoin did a 5x from 20 to 2021, oh man, alarm bells had to be going off in every finance ministry in the world. Like, holy shit, this is a different animal. We got a real problem here. And I mean, the conspiracy minded would say, okay, so they pumped up FTX and they pumped up all the crypto shit in order to do a rug pull there, figuring that would kill Bitcoin. Do you know what I mean? We'll let crypto shit go wild, and then when we pull the rug on that, Bitcoin will die. And they're wrong. I mean, Bitcoin's going to live, but it certainly created some angst for all of us as we watch all that other shit die. It's amazing to me. I looked the other day, Dogecoin has still got like a multi-billion-dollar market cap. I'm like, what the fuck? I mean, it makes no sense. Makes no sense at all. So I don't know. I got off track there. Where do you want to go next?
That was great. I do. I want to swerve there a little bit. When I was looking at gold about 2 years ago, though, I was like, oh, do I buy the ETFs? Do I buy the mining stocks? And I was like, fuck it. I can't put in the work to figure this out to establish a position.
Okay. So first of all, you start by buying gold coins, okay? And you store them somewhere. And the reason you have those, you want to be able to bribe the border guards, right? When you leave the country, right? But if you want to buy paper gold, there's only one that I trust. It's called PHYS. It's the Sprott Physical Gold Trust. It's run by Eric Sprott. He's a gold bug. I trust him. I'm quite sure they have the metal they say they have. The negative with that is it's located in Canada. And what happens when Pierre Trudeau says, you know what, we're just going to nationalize all the gold?
Right.
Yeah. So, I mean, gold is very much like Bitcoin in that respect. Not your keys, not your coins. I mean, if you want to hold gold, you should hold physical gold, period. Right. Now, the stocks are a different matter. And what the stocks represent is, they're a claim on future streams of gold. And they've got all kinds of problems because it's a tough business. You're breaking rocks. And so, having said that, it's priced as a tough business. I mean, some of these things are trading at 2 or 3 times cash flow. I mean, that's a 33% earnings yield at 3 times cash flow. So, and some of them are growing. And that's my business, is to pick the best names within the gold and silver mining space. And if you do, you can have things go up 10x, but you can also have things that go, down to 0. And the general rule of thumb, this might help your investors or your listeners, is that if gold goes up, this is a broad statement. Gold goes up 10%, gold stocks should go up 30%. So the stocks represent kind of a 3x multiplier to the underlying metal. That's kind of a rule of thumb. And, if we're about to get a bull run here, I fully expect that that's kind of what will happen. I think gold's going to take out 2070, which was its last high on the Russian invasion of the Ukraine. And when it does, I think it's going to squirt up to something close to 3,000, maybe 2,800. And when that happens, all these miners are going to go nuts, and I've got a portfolio full of them. So, so I don't think any Bitcoiner needs to hold gold. Arguably, actually, there's a stronger case for silver. Let me explain that. Gold really doesn't get used that much. There's few electronic uses, but silver is just as good a conductor. Gold is really jewelry, and the positive on gold is that Russia loves it, China loves it, India loves it. I mean, all the world except the U.S. loves it, and they understand what it is. Silver is really pretty interesting, but the thing is, all the gold that ever has been mined still exists and can be drawn upon. Silver is kind of on a as-you-go basis. There's only about a year's worth of silver stocks above ground to be called on. And it actually has a lot of uses that are absolutely necessary. I mean, solar, electric cars, electric circuitry, et cetera. I mean, we're using it. I mean, there's more of it than gold. There's 15 times as much silver as there is gold in the world. And that's why it's cheaper per ounce. But the point is that we really need the silver. I mean, we need the silver to run our economy. And there's no stockpile of it. And that's why it's more volatile than gold. It can go up more. I mean, I could see gold going to 3,000, which would be, call it, that's almost a double on today's price, a little less. In the same time frame, I could see silver going from 20 to 80, which is a 4-bagger. So 50% increase in gold could be a 4x increase in silver. Right. So I would, and I actually think everyone should own some silver. I mean, that's the other thing about gold. So you own a gold coin. How are you going to go pay for something? It's worth $2,000. What are you going to go to your grocery and say, well, I'll give this to you and you give me food for the next, 3 months? I mean, it's kind of, there are smaller ones, but most gold coins are an ounce, and that's $1,800. So I own a lot of silver coins. Silver coins are great. An ounce of silver is worth $25. I mean, I'm thinking an ounce of silver buys me a steak dinner. It buys me a tank of gas. It buys me, a bunch of 9mm bullets. I mean, whatever, it's a $25 today. It'll be, $50, $60, $70 in the future. but it's very, and everyone knows what it is, and you say, hey, this is solid silver, it's a maple leaf or it's an American eagle. So I would suggest to you that if you have a bug out bag where you're thinking, okay, it's going to go Mad Max on me, or I just want to be protected, I think everybody should own some silver coins.
Yeah. Interesting. I want to talk a little bit more about gold, though, from maybe a geopolitical standpoint.
Sure.
What is going on with Russia, China, India, and the U.S. and their stockpiling of gold?
Yeah, well, so the U.S. is, as far as I know, they haven't bought or sold any. I think there's a lot of debate about whether we have the 8,300 ounces we claim to have. I think Fort Knox might have been looted. Ron Paul told me he thought it had been. I would say that there's a chance that they're buying some on the QT. I don't know. If they're smart, they are. We know that India has a lot of it. We know that Russia has a lot of it. It's announced they're buying again recently. China just started buying again. I think China has a lot more than they report. I mean, they're relatively smart about their geopolitical moves. We know that the Middle East has a lot of it. I mean, it's hard to move around and hard to transfer, but it is, indisputably money and has been for 5,000 years. And so, if you look at Zoltan's most recent piece, there's been discussion about, they're all, look, when America grabbed the Russian reserves, the $600 billion of reserves when the war started, remember that? I mean, they froze it, right? We basically stole it. Right. I mean, that was an enormous, enormous event in terms of all these other countries going, holy shit, if we do something the U.S. doesn't like, they can grab our money. Boy, I better have money that isn't in the banking system, isn't in the U.S. SWIFT system. And so what you're seeing now is all of these other countries, they're starting to trade with each other directly using their own currencies, not using the US dollar. I mean, the US dollar used to be 90% of the volume of foreign trade. I mean, it didn't matter. I mean, you could be in Russia buying oil from Saudi Arabia, but you had to convert your rubles into dollars and your dollar, no, I mean, they're doing it direct now. I mean, the Saudis are accepting rubles. The Saudis are accepting the yuan. The Russians are accepting, the Indian rupee. I mean, and this is all because of the way the Americans have behaved. We've behaved in a way that we're using the dollar as a weapon. And so the rest of the world has said, all right, that's fine. You want to use you use the dollar as a weapon. We're going to develop alternative currencies. And by the way, Bitcoin's going to become one of those. I mean, Russia kind of gets it. I think China's making a mistake. They're very negative on Bitcoin. I don't think they like the privacy aspect of it. I mean, one of the original use cases, as I understand it, was wealthy Chinese were using it to get money and ship it to Vancouver, right? I mean, one problem, you're wealthy in one of these countries, you want to get out with your wealth. Well, how are you going to take a suitcase full of gold? It's kind of hard to do. I mean, that's one of the great use cases for Bitcoin was, okay, convert whatever it is you've got that's wealth into Bitcoin in 12 words and hop on a plane with your Trezor and you're gone, right? So that's
Do you think? I mean, in the scenario where Bitcoin plays out over 50 to 100 years in terms of a transitionary period, do you think the U.S. is at risk not stockpiling gold? And when you mention something like Fort Knox, I mean, like on one hand with gold price suppression, my conspiracy theorist has like, okay, there's some company in the Cayman Islands whose job is to lose money on every trade. And somehow I'm funding billions. We're funding as taxpayers just a loss against.
Yeah, well, it's just money. It's just money that's printed. It's just money that's printed off balance sheet. I mean, I think the government keeps two sets of books, and so as necessary, they just off balance sheet.
But gold disappearing from Fort Knox is a whole other kind of like. Is that end up in a private hands? Was that sold as a government program to deflate price? I mean,
who knows? Who knows? I mean, did the CIA use it to fund black ops? I mean, I just don't know.
Right.
I really don't know. I mean, look, the government does a lot of things. I mean, you've heard about all those pallets of cash. You've heard about how the Pentagon couldn't account for trillions of dollars of spending. I mean, the government does whatever it needs to do to defend itself, right?
Right. So at
some point, I think somebody realized there was a honeypot at Fort Knox, and they, just said, well, how are we going to fund this? And well, shit, let's just, let's raid Fort Knox. We'll sell that. We'll use that cash.
Right.
And, I mean, this was before they thought, screw it, we don't even have to do that anymore. We'll just print it.
Right. Well, I think of a few things here, though. So, if we move away from the fiat standard, right? Even the Bank of Venezuela couldn't get their gold from the Bank of England.
Right.
So, and we talk about Chinese money maybe leaving China through a treasure and ended up in Vancouver, probably got put right into a Canadian bank upon landing into the fiat system. But
Maybe.
my point is, if they're not going to trade in dollars, I'm not sure these countries are going to trade in lesser fiat going forward. I mean, you might get away from sanctions and blacklist, but then you enter they you're going to take rubles when they can print their own rubles, and what is that worth?
Yeah, no, that's right. That's right. I mean,
So
they've always got the risk of currency depreciation, but they can look at one another's balance sheets.
right.
And as Zoltan points out in his most recent thing, he said, look, okay, so let's say you're Saudi and you're accepting yuan for oil. You're printing something. I mean, oil is very valuable, right? The world runs on oil. You need oil. So you're Saudi, and it's a depleting resource. I mean, that won't be there forever. So you're Saudis. You're saying, okay, yeah, we'll sell you this oil, and you give us yuan. But then you're saying, okay, now I got this yuan. What am I going to do? Well, what can China give me that I want for the yuan? And there are things that China does pretty well, and they probably, okay, great, yeah, we'll spend yuan to do that. But let's say we're getting more than we can spend. Well, it just so happens that there's also a Shanghai gold exchange, right? And so, all right, you've got yuan, from the sale of your oil, your oil to the Chinese. They gave you yuan, so you take the yuan and you say, all right, I'm going to convert that into gold. I'm going to go to the gold exchange and convert that into gold, and just send me the ounces, right? And eventually that's going to be, I'm going to convert that into Bitcoin. I mean, I think it already is, because I think there's sovereign wealth groups that are buying this stuff, but again, it's still kind of early days. There's still a lot of fun on Bitcoin, right?
Yeah. So from a sovereign nation standpoint, do you see gold sort of playing a very prominent, prevalent, important role in the next 20 years?
Yeah, I do. I mean, I don't look, I would love if we could just jump to the Bitcoin standard. I mean, I would, that would be the smart thing to do. I mean, you've seen Jason Lowery's work. I mean, strategically, I think the countries that adopt Bitcoin as their, neutral reserve currency are going to benefit at the expense of those who don't. Very much the way we benefited by going on the gold standard when China went on the silver standard, as Safe points out in his book. But I think too many people are still too wedded to gold that they will try gold first as a neutral reserve before they get to Bitcoin. That's Bitcoin's not far enough down the road, fully developed enough for the big parties to make the jump to Bitcoin. I mean, hopefully the US will start to make a transition to it. I mean, we would be very well suited because we've got great technologists, and we probably don't have as much gold as they do. And it's kind of like, hey, you guys, yeah, hang on to your shiny rocks. We're saving money in terms of Bitcoin. Do you know what I mean? But, will that happen? I don't know. I mean, sadly, the people who run most of these countries are boomers. And, boomers aren't necessarily digitally savvy, and boomers, some can see it coming. I can see it coming, but many can't. And, the people who run these countries are also statists. And frankly, what they don't want gold to work either. I mean, they're only going to go to gold because they're forced to. Right. I mean, what they want to do is they want to keep the fiat system going because it works just fine for them. Right. They're at the top. They're raking off, all kinds of seigniorage. But of course, once it starts to fail, then they will start thinking, all right, what are our alternatives here? I mean, and of course, we're probably got to go next. They're probably going to try the CBDC. I mean, this MIT project announced they have it running. They've done a gazillion transactions on it. It works. Maybe they'll say we got to pay our taxes in CBDC. Maybe they'll say we're going to have universal income, but you got to do it, with the CBDC, whatever. But as you know, and I know, no Bitcoiner is going to accept a CBDC as an alternative to Bitcoin. I mean, CBDC is just digital fiat. We got plenty of that, right? We don't need any more of that. So,
do you see any, thinking about the parallels with gold, do you see a Bitcoin 6102? Either where there's confiscation, if Bitcoin became that important in the world?
Really a great question. Yeah, 6102 was when when Roosevelt grabbed it. Yeah, I mean, I mean, the thing I think is wonderful about Bitcoin is that I think it's got the technology that's going to make it. I mean, we're going to thwart them at every move. Okay, and absent them, holding a gun to your head and saying, "I'm going to kill you unless you give me your 12 words." They can't take it from you. They just can't. Now, they could torture you to get the 12 words, but it's not like it's physical and they can grab it, they can search your house and find it. So, okay, we're going to grab your Bitcoin. Well, fine. I lost mine in a boating accident. How are you going to get it? Where are you going to find it? I said, well, we're going to look at the blockchain and see what one we're, okay, fine. But, Lightning and Fediment and all these things that are coming, I mean, these things are going to make it very difficult to trace, where it's gone. It's like the $600 transactions. I mean, or paying taxes for, when you spend some of your Lightning coins, you buy a cup of coffee for $2 and maybe your basis on that coin was lower. And so theoretically you have a tax liability. I mean, how the fuck are they going to track all that? They can't. They just can't. So I think the thing that's beautiful is that the technology is extremely robust and is going to make it. They might try a 6102. Here are the two things, Cedric, that I think are possible, very much possible on the horizon. One, I think they don't like the fact that we all have private addresses. I could very easily see where they decide, well, we think this stuff is being used for criminal shit. Therefore, you've got to disclose what your addresses are. Now, that's going to be a really pretty big Rubicon we're all going to have to face. And I suspect the way a lot of people will deal with it, I'm not suggesting I would do this, but it will say, well, yeah, here's my private address, and that'll be one, right? But okay, there might be more than that. The second thing, I think, if they really wanted to kill it, what they could conceivably do, and they could do this with gold too. I mean, I think at some point, as Gresham's law kicks in and their system starts to flounder, I think it's entirely possible that they're going to say, they're going to develop a narrative that says these sound money people are killing our economy and they're not patriotic. This is like they didn't buy. It's like not buying war bonds during World War II. They're benefiting at the expense of everybody else by opting out of our system and having this non-American money, Bitcoin and gold, right? And therefore, we're going to tax it, 90% tax on any gains you make in Bitcoin and gold. Now, that's a problem, but it's really only a problem if you sell, because they can't tax unrealized gains. And all we got to do is be able to hang on to it long enough until we can overthrow that government, right? And, I foresee a situation where the sound money people have all the marbles. I mean, I think we're going to break these assholes. I really do. I think the fiat people are going to go down. I mean, when Bitcoin's at $1 million a coin, and when gold's at $10,000 an ounce, honest people who have held these things are going to be the richest people in this country. And other people are going to be hurting. Mm-hmm. These honest people are going to be standing up and saying, look, here's how they did you wrong. Ben Bernanke is John Law. He should go into the history books as a complete fraud. All these things are going to be exposed. I mean, the fact that the CIA killed Kennedy, all this shit, it's all going to come out as part of this fourth turning. And there's going to be a massive reset. And honest Bitcoiners are going to end up creating America 2.0, kind of some constitutional amendments, maybe, rank order voting, take all the money out of politics, term limits, you name it. Just a complete reform of all the fucking shit that's broken. And that'll happen because anybody that has a coin will be rich. And anybody that has 10 coins will be really rich. And they'll be the people who are in a position to lead and make a better system. So, that's my dream. And I don't think it's a dream. I mean, I think it actually could be a reality. I think there's some issue about how long it'll take. I mean, I'm 65. I think it happens in my lifetime, but probably at the tail end of it. I mean, this is I think it's a 10, 15, 20-year project here until we get complete fiat failure and complete government reform. I mean, fourth turnings historically have lasted 20 or 30 years. And I think the kickoff to this fourth turning was the GFC. So, the earliest this thing could wrap up is 2028. Was that 6 years from now? And the latest it could wrap up would be 2038, maybe. So, but it's going to wrap up because the math is just, it's relentless. It's absolutely relentless, and more people are figuring it out. I mean, people say, how can we make this go faster? How can we get to the other side quicker? What's the right, we got to orange pill everybody. We get, I mean, the thing, I'll tell you something I think is really important, or to me is a huge thing. I was fighting this battle before Bitcoin was invented. Okay. I've been fighting this battle for 20, 30 years. I've been a sound money guy. I've been a hard money advocate. You know how cool it was to see Bitcoin come along and to see Safe's book come along and start going to conferences and to have 20 and 30-year-olds, quoting von Mises to me. I mean, shit, I read von Mises right after college. And I used to talk about Austrian economics in the 80s and 90s, and people thought I was from Mars. I mean, nobody had a clue about this shit, right? And we're still in early days. I mean, the people who get this whole sound money issue, it's definitely less than 10% of the population. It could be as low as 1%. I don't think it's quite that low. It's somewhere between those two numbers. Well, the whole world's going to understand this shit in 30 years. I mean, our grandkids are going to say, can you believe they sat around and let one small group of people set the price of money? I mean, what the fuck were they thinking? You know what I mean? They had these incredible booms, these incredible busts. They had the Depression. They had all this shit. They had all these wars. I mean, it's like, I think the other side of this is going to be a much better world. But, sadly, changes of this nature, they don't happen without serious pain. And then, the pain is what's going to lead to the reform. So, we gotta go through the pain.
Right. Well, that was well said. Are we all poorer on fiat money?
Oh yeah, much. I mean, think about it this way. Think about all the technological innovation that's occurred since 1970. The computer, the phones, I mean, just everything. It's huge. We should all be working 30-hour weeks and having more. It's like, where did all that shit go? Well, we squandered it away. We spent, $6 trillion fighting useless wars in the Middle East. We gave it to, quintillionaires, who basically have more than they could ever spend in their lifetime by playing the fiat game. I mean, evil guys like Buffett and Munger, I mean, yeah, we should all be living much better than we live today. And we will. That's why there's so much hope and so much optimism of those people who believe in Bitcoin, because it's going to make the world a much better place. It's going to be a much fairer system. I mean, I remember the 70s very well. The 70s weren't perfect. The Vietnam War was a huge stain. But this country was a better country overall in the 70s. I mean, I lived down the street from the CEO of Ford Motor Company. He probably made 6 or 7 times what the guy working on the line did today. I mean, today the guy who's the CEO of Ford probably makes $15 million a year, and the guy on the line makes 70. It's nuts. I mean, it's nuts. We've got a broken system.
Speaking of a broken system, so I'm thinking about price distortions.
Yeah.
You know how money distorts its information, but it's starting to hit a little differently in the sense that, you think about like, oh, okay, 10% inflation in this vector, 20% inflation in the real estate vector. But now I'm starting to see some things that are really weird, right? like $6,000 coach plane tickets from Chicago to Florida, right? Like not just, oh, that's up 15%. Like how fucked up is the money right now?
It's pretty fucked up. I mean, it's pretty, well, that's what I said this before in the past to other people. Nobody knows what the fair price or the real price of anything is. I mean, it's like they have so broken the money. I mean, this is how, think about it this way. Don't you, I mean, you're in Florida. A year and a half ago, there were bidding wars for houses, right? I mean, bidding wars. You had to say, I'm hitting the full price bid. I'm going over the full price bid. There's no financing contingency. There's no inspection. And then you didn't even get the house, or maybe you got it, right? Now you list your house and it sits there. I mean, and this is all because of the broken money. Go look at a chart of lumber. I mean, it looks like a person having a heart attack. I mean, if you were in the lumber business, I don't know how you do business, right? I mean, what's lumber worth? It's gone up and down multiples several times throughout COVID, throughout, all this. And again, it's just, it's a lot of things. Obviously, a lot of pieces. Part of it's the monetary expansion. Part of it's the supply chain issue. Part of it's getting used in housing, which, when interest rates are 2 or 3%, people are, building houses and trying to grow that market. And when interest rates are 7%, nobody wants to buy a house. I mean, but yeah, I mean, things are extremely broken. I mean, I have the same experience. I've been invited to speak at a conference in England or in Switzerland. And, I don't know, last time you went to Europe, I mean, for a long time, if you flew the cheapest flights, you could get to Europe for less than $1,000. I mean, 800, 900, 1,000, maybe a little more, but whatever. I could not figure out a way to get to Europe in April for under $2,000. I mean, it's twice as much,
Right.
So that tracks with your Chicago to Florida. I mean, those are probably the peak flights and peak times, right?
Right. The other side of this is, and I've heard you mention this, it seems like to make ends meet, people are working 2, 3 jobs now. And I that really resonates because I'm working 2 jobs. And you know, what I get about that is, you know, I think I talked about this with Dave Collin, is lifestyle creep. So a lot of people aren't giving up what they're used to, and to kind of make ends meet, they're just working a little bit more. But everywhere I go is short labor.
Yeah.
So
yeah, well, some people have exited the workforce. I mean, there are a lot of boomers retiring, but yeah, I agree with you. That's a little bit of a puzzle. You know, I mean, people are also, the other thing that's going on that I think is very interesting, and this is going to hit the wall eventually because interest rates are going up. People are using their credit cards to keep their lifestyle going. I mean, I think everybody's gotten poor in the last 6 months to a year. You see this incredible credit card growth, and that's dangerous. And the credit card, I mean, I've heard the average interest rates on these credit cards now is approaching 19 or 20%. I mean, that's usurious. I mean, you start building up a big credit balance and you're paying 20% interest, it's pretty hard to get out from underneath that. You know, so it's the money is clearly broken. It's clearly broken, and that's the fundamental problem. You know, that is the underlying fundamental problem. And more importantly, back to the inflation thing, you know, I made the comment that I think we're in an inflationary decade. And here's another piece of evidence that supports that. Labor costs. Okay. The labor, you know, look, we've had so much inflation that and the job market is tight. They printed too much money. People are working 3 jobs. And, you know, labor costs are going up 6% a year. Well, how are we going to get inflation back to 2% if labor costs are going up 6% a year? And, you know, if you're a railroad worker, they're going up 15 or 20% a year. I heard the Southwest pilots just got something closer to 15 or 20% a year. I mean, you know, and I think some of this is just that, you know, you got a lot of boomers retiring. And, you know, the demographics are such that you know, there aren't people coming along behind them. And I think there are a lot of people, if they don't have to work, they don't want to work. I mean, you know, frankly, it's, you know, doing a lot of things in today's world are unpleasant. I think that's the other thing. I think there is a group of people who, through the pandemic, kind of changed their lifestyle to working out of their own house and to not having the total rat race, and kind of came to the conclusion that, you know what, maybe I should downsize my life and, you know, live a little bit more frugally and not work as much. You know, some people that could do that have done that. Do you know what I mean? And that might be another reason why there's less labor supply.
Yeah, it's confounding. I mean, even one of my mom's best friends, I mean, she's like 80 years old. She just attempted suicide. She's having a really hard time. I mean, she's still trying to work, having a hard time holding a job down. And, you know, it's just, I think it's tearing people apart. It's causing a lot of, I think, illness and grief in society.
Oh, absolutely.
That just seems beyond economics. You know,
well, the pandemic was a really evil thing. I mean, and the way they handled it and what it did. I mean, it just, you know,
But a lot of people are rooting against their own best interests. I mean, you see things like Social Security got a 10% increase.
Yep.
A lot of people are thinking that it's political, that it's been awarded to them. That lucky me, the best raise I've gotten, and that the Social Security program has gotten in X amount of years. They're not thinking about where the money's coming from. It's not necessarily their own. It's not necessarily.
Oh yeah, no, it's look. I mean, look at the students. I mean, you know, and I'm not.
Yeah.
You know, right.
Now I think they've been preyed on. I think the cost of education and sort of like the factor of, you know, you can only get somewhere in life if you take on this enormous debt. But I think that's been predatory. But they did enter into this as a contractual agreement, and
absolutely. Look, and what it shows, I mean, and then look at the government response, right? We're going to send you a check to deal with inflation,
right?
I mean, you know, okay, let's think that one through. I mean, where are you going to get the money to send the check? Well, we're going to print it. Well, isn't that going to make inflation worse? I mean, it's just, you know, look, we kind of live in clown world right now. I mean, we really do. There's just, you know, and it's a function of how broken everything is. And there are people who say, well, don't you want it to get better? And, you know, well, and there's a part of me that's like, yeah, I do want things to get better, but honestly, to get the kind of reform we really need, I mean, I'm kind of like, you know, bring it. let's just, I mean, this system is so broken. Let's let it blow up, because frankly, we all have limited time spans on this planet. And, I want to get to the new system that's better and live in a system that's not broken. It's like, let's rip this Band-Aid off. Why live in a broken system when you don't have to?
What is rip the Band-Aid off? Is that print to infinity, or is that stop printing and let it crash?
Well, no, I mean, I think it's, printing to infinity would do it. I mean, I think, look, the fundamental problem is the money's not sound, okay? And how you get from here to sound money, I mean, if I were God, and, or if our leaders were truly enlightened, somebody would wake up and say, look, we've got an unsound money problem. We need to have a kind of a quasi debt jubilee. We need to reset the money, and we're going to create a new dollar. It's going to be backed by gold or Bitcoin or oil or some combination of the three. And therefore, you're going to know that we can't print it to excess. And you can exchange 5 of your old dollars for 1 of the new dollar. And we're going forward on this new system. And so you've just depreciated all that old debt. It's now worth, a fraction of what it was, in terms of a burden. And everybody who's got earnings power goes forward. And we now have real interest rates and a real return on capital. And, interest rates are set by supply and demand, and, all the classical economic things that make a society work. I mean, the reason we're all poor is because we've fiddled with interest rates, and that's led to malinvestment and misallocation of capital. The way to solve that is to make the money sound. So the way to do that would be to do, I mean, in a way, Roosevelt kind of did this when he devalued gold. He did that to get us out of the Depression, and it kind of worked. There were other issues, but the point is, we need to return to a sound money system, and enlightened politicians could come together and do that. But you and I both know the odds of that are probably close to zero. So what's the other alternative? The other alternative is, we have just outright hyperinflation, and the money completely fails. We go full MMT. Why fuck around? We do total universal basic income. Inflation runs at 20, 30, 40%. And then the entire country is screaming, oh my God, you're destroying our money. We can't save. Everyone who had savings and they're denominated in dollars, they're wiped out, et cetera, et cetera. Those people who had sound things, those things held their value. But the cry for a political solution is so loud that a Ron Paul-like character, or somebody who understands sound money, steps forward and says, I can stop the pain. It's going to be hard, but we need to go to a sound money system. And here's how we do it. And they do it, and things get repaired. I mean, if you look at other historical examples of hyperinflation, it is, assuming we don't get into a shooting war, if you look at other examples of hyperinflation, it's amazing how quickly the society will repair itself when you go back to sound money. I mean, the buildings are there, the plants are there, the fields are there, the oil is, I mean, everything's there. The problem is all the pricing's screwed up. Nobody knows what to do. You're not getting the right signals. You don't know if your lumber's worth this, your lumber's worth that. I mean, and everything's a scam, right? I mean, everyone's trying to promote everyone else. If you go back to, you can count on the money being money good, i.e. there will not be too much of it. It's what Jeff Booth says. If money is scarce, then times are good. If money is too prevalent, times are terrible. And what we got right now is money is way too prevalent. We need to make money scarce so that it truly signals what's valuable and what's not valuable. And then the economy would work. And as I say, you study hyperinflations in history, when they solve the money issue and they get back to sound money, legitimate sound money, things repair themselves quickly. They really do. So,
I think you kind of described the inflationary depression there.
Right.
So
exactly
then
right.
Someone on Twitter, I don't remember the exact Twitter handle, but wanted to know the pros and cons of a deflationary world on a Bitcoin standard.
Right. Yeah, that's a great question. I've thought about that a lot. And there are people who say, well, we can't live in a deflationary world. Bullshit. I mean, from 1789, when the Constitution was, approved until 1913, we basically had a deflationary world. I mean, the prices in that century were pretty flat, and yet everyone's living standard went up. And the reason was things got cheaper. I mean, this is Jeff Booth's point in his book. I mean, productivity increases over time, and we learn to make less, or we learn to make more with less. And that's the real basis of wealth. I mean, that's the Keynesian flaw, right? Keynesians thinks you got to have growth at any cost. No, that's bullshit. In a limited resource, planet, unlimited growth it's insane. What you want is you want to figure out how to get the same or more with less inputs. And so deflation naturally leads to that. Now, you're not going to have this big financial structure. You're not going to have 18% interest rates. You're not going to have usury. You may not even have much of a debt market. If you look at how things were financed in the 1800s, there wasn't a big debt market. I mean, people wanted to build a business. They got a bunch of investors together and they put in the equity. You own 10%, you own 10%, and they used that money, and that money built the business. And then the returns were the dividends and the profits of the business. So there wasn't a lot of borrowing. I mean, borrowing in a deflationary environment is going to be tough because you're paying back even more. If the money is increasing in value, that debt gets heavier and heavier if you have legitimate deflation. But in turn, knowing that, interest rates might be pretty low. I mean, if you had deflation, you knew your money was going to buy more in the future, you might be willing to lend it out at a 1 or 2% interest rate because it was appreciating in its purchasing power by another 2 or 3%, in the natural deflationary cycle. But the world will look different for sure, but that's not a bad thing. And a world with less debt and debt-fueled growth, I would argue it's probably a pretty good thing. And again, people say, well, how can you live in a deflationary world? I mean, if you study the history of the world, more people gained more. Living standards never increased as rapidly as they did between 1800 and the early 1900s, ever in the history of the world. I mean, in the United States, people went from being dirt farmers, pretty poor, to, a general middle class throughout the entire country. And there was very low levels of debt, and there were it was all just based on increased productivity. And in the latter part of that, the Industrial Revolution, the technologies that made our lives better. So I think being in a deflationary world would be a beautiful thing. I think most people don't see that or understand that. I mean, again, we would be investing in what's efficient, not what's going to lead to growth. And that's hard because people want to think, well, I'm always making more money. My salary's bigger. My house is worth more money. Mm-hmm. Well, no, it's just a house, and and your salary doesn't need to be bigger. What you really don't care about is your salary being a bigger number. What you care about is what's that salary going to allow you to do? Are you going to be able to buy the food you need? Are you going to be able to, pay for the housing that you need? Are you going to be able to send your kids to college? So it's a different mindset for sure.
Yeah. I think rates going up is giving everyone a very quick lesson in economics around purchasing power.
Yeah.
So in that regard, can housing crash while Bitcoin and gold still run?
That's a great question too. I think the answer is yes. I don't think housing is going to crash because I don't think housing is in a particularly large bubble. I think bond values can crash, and I think stocks can crash. And I think housing can generally be soft. I mean, the thing to keep in mind with housing is that it is a fixed asset, and it's bounded by its replacement cost. And so, it's unlikely for it to crash below its replacement cost. So, for any extended period of time. So, but yes, I mean, particularly in areas where it got bubblicious. I mean, can Palo Alto housing crash? Absolutely. Can high-end housing crash? Can McMansions crash? Absolutely. Do I think a $400,000 home in the Midwest that's a standard family home that would cost at least $400,000 to replace is going to crash in value? No. I mean, it might be a little soft. Maybe it goes to $350,000 or something. But you see what I'm saying? I mean, I think that things that are bounded by reason that never got into the bubble stratosphere. I mean, can high-rise apartments in New York City crash? Oh yeah, they probably can. I mean, these guys, these hedge fund guys who were buying $20 to $100 million penthouses. Oh yeah, they're gonna get.
That's a lot of political money or geopolitical money trying to avoid.
Well, there's some of that
complication. Yeah. So I mean, that might recede as well.
Yeah, certainly.
I'd probably be shot on Fifth Avenue if I didn't ask you about the Fed. And whether you think they're going to pivot anytime soon or change course?
So they've already kind of, Yes, I think they will pivot. I think they will change course. The timing of it is hard to know. I think they're going to hold on as long as they possibly can. But just as we were shocked with how quickly, I mean, remember a year and a half ago, they said that we're not even thinking about raising rates, and then they did the fastest rate increase ever. I think we're going to be shocked at how quickly the narrative will change when they have to change it. And when enough things, when the rivets, as I said, another cost, when the rivets start to pop out, they're gonna change. They're stopping, they're gonna peak. First, it'll be a peak in the rates. Then it'll be maybe we're thinking about lowering them. Then it'll be maybe we're thinking about QT, turning that off. And then if something big breaks, because their third mandate is financial stability, they're going to go right back to QE, and they're going to have to. And I believe all of those things are likely to happen. Well, not all of those things. The beginning of those things will happen, in my opinion, in Q1 and Q2. And I think we'll be very lucky to get out of 2023 without a 2008-like moment. I've said this before. I was around in 2008. I was short all the financials. In the summer of 2007, the Bear Stearns CDS funds blew up. They both went to zero overnight. Okay. It took until October of 08 until we had the full-blown GFC. So what's that? A year and 5 months, something like that? All right. So if you consider the peak of this bull market was December 2021, which in the stock market it was, and then if you consider that Powell started raising rates in 2020, February of 2022, add, a year and 5 months, right? So where does that get you? Somewhere in next year. That's kind of how I see it unfolding. And you're seeing rivets, right? Japan recently, they lost control of the 10-year. They can't have yield curve control 25 bips. They got to take it up to 50 because it had already blown through the 25. This summer, England, they said, okay, we're going to cut, we're going to cut taxes and we're going to spend more money. The bond market said, no, you're not. And yields went up enormously and the pound went down enormously. Of course, that then led to, their pension funds, LDI stuff blowing up. Again, more people using leverage, playing games, and they quickly reverse course, right? And so these to me are minor rivets. These are like the Bear Stearns funds blowing up in 07. And, you cannot slam on the brakes as hard as we slammed them on without having serious economic impact. I mean, I just tweeted it today. I think housing prices dropped, I think it was new housing sales were down 38%, right? Mm-hmm. Largest drop ever. So yeah, it's coming, but in macro land, things take a little time to flow through. Right. Think of all the people who have HELOCs. I know people who have HELOCs and, they were paying 1%, to borrow money against their house. Well, now they're paying 6%. Well, how does that feel? It's so these, look at another one is look at the US government, right? US government was paying $300 billion a year in interest costs as recently as a couple of years ago. 750 run rate now, right? And going up. If interest rates continue, and so eventually this is you're touching on an area that and this all ties together that I call the debt doom loop, right? If the federal government budget deficit continues to increase, those are bonds they have to sell. They have a hard time selling them. Interest rates go up. Higher interest rates mean more interest costs for the federal government, which means bigger deficit, which means more bonds to sell. See where I'm going here? Yep. It's a vicious circle that kind of keeps getting worse and worse and worse. And, so the deficit's $2.5 trillion this year. That's Luke Groman has pointed out, that's kind of the run rate. 2.6 is the run rate right now. The pandemic peak was in the mid threes. We start to go through that and things are going to start breaking again. Right. And at that point in time, I think what's going to happen is the indomitable Max Kaiser said, you can't taper a Ponzi, right? You just can't. In a credit-based system where you have to have growing debt in order to keep the system running. You can, I shouldn't say that. You can taper a Ponzi if you want to have a 1929-like outcome. They can continue to raise rates and eventually the entire economy will collapse. It really will. At 10% interest rates, you'll see bankruptcies everywhere. And maybe that's the game plan. Maybe they're, they're completely evil and that's where they want to go. I don't think so. I think that before we get to that stage, they will have to pivot. And so whether that's in Q1 or Q4 of next year, I'm pretty sure it's next year. That's my take on it. Again, that's a guess. I could be wrong. I've been wrong a lot. So
We got to guess. We're doing
Yeah,
analysis
right.
here, and none of this is financial advice. I think about, I sold my house this year. I've yet to re-enter, home ownership, but Zillow hasn't really changed the price of the house, and rates of the cost of money has doubled. And I wonder how much like a company like Zillow is like the Moody's of today, where
Yeah,
they're just not reading the signals, or they're not incentivized to share the signals with the other half of their audience.
that's a
And,
great
and,
point.
and they're
Yeah.
betting against, and a lot, because they have inventory, I believe. They have a lot of
Oh, yeah.
houses on their balance sheet. So not only would they be communicating information, but they'd be, kind of devaluing their own balance sheet. It's been fascinating to watch that. My question to you though is, when will Bitcoin be seen as a risk-off asset?
Great question. Really great question. I think on the next cycle, it'll become a lot more clear, because you're going to see something. I think a lot of people thought it was a risk on asset because it traded the way the NASDAQ traded. And it traded a little bit based on all the free money, and just the monetary excesses. And I think on this next cycle, it's going to climb out of that. You're going to see the stock market going down and Bitcoin going up. And there's going to be, in many investors, many professional investors, there's going to be kind of an aha moment where people are going to go, oh, this is really a different animal. They thought it was a risk on trade because it was just, number go up and, all the usual hype, right? But what they're gonna see is, no, other things can be going down and Bitcoin's going to be going up. Gold will be going up too, by the way. And they're gonna come to the conclusion that, this really is kind of protecting against monetary debasement, and the monetary debasement's getting worse. I honestly think this next pivot might be the Fed's last. I really do. I think, all that, I've said this many times in other venues, but I'll say it here. All that needs to happen for hyperinflation to take place, again, I've read and studied so many of them, is we need to have a quorum of the people sincerely and completely believe, deep down to their core, that the government can never stop printing money, and that therefore whatever money they have is going to be debased, and that therefore whatever money they have, they must put in something that will protect against the debasement. And this is defined as Gresham's law, right? I mean, the bad money drives everybody into the good money. And the good money in this case is Bitcoin or gold. And so, on this next pivot, the Fed's, Powell is bluffing. He says we're going to get inflation back to 2%. He says we haven't lost control, even though he has. And the market believes him because the forward swaps are at 275 for 5-year inflation. It's bullshit, but people believe him. When things start to break, he will have to change his tune well before the inflation rate's at 2%. And everyone's going to go, that's interesting. He really has lost control. He cannot get inflation down. All those guys who've been talking about, inflation is inevitable, they are right. And then you're going to see just an enormous movement of capital from other things into our things. And I've said this before too. There's $450 trillion of fiat shit in the world: cash, stocks, and bonds. All of Bitcoin, what is it today? 350 billion, 400 billion. So 450 trillion, 400 billion of Bitcoin, tradable gold total is maybe 10 billion. 10 trillion. Tradable gold, probably half of that, 5. Gold stocks, maybe less than a trill. So call it 6 or 7 trillion of sound money. Bitcoin, gold stocks. Okay. 450 trill of unsound money: bonds, cash, and stocks. Stocks are not completely unsound because they represent claims on businesses which could earn money and will reprice. If you held stocks in Weimar, by the way, if you held through the whole thing, you got killed in the middle of Weimar. But if you held Siemens all the way through, you came out whole. You came out ahead because you had a share in a productive enterprise that, once they reset the money, became worth the same amount that it was worth, or more than it was worth before the hyperinflation. Okay. So stocks actually have a protective element against hyperinflation, but they're very volatile in the middle. But the point is, when that 450, as I said earlier, when a quorum of the people come to the conclusion that they can never stop printing and that it is inevitable that they will have to continue to print, they are going to say, please protect my assets in stuff that cannot be printed. All it takes, it doesn't take the whole 450 coming into Bitcoin or gold for us to go way up in price. Even if only 10% of it comes in, that's $45 trillion chasing 7. How much does the value of our stuff have to go up? And I said this in another cast as well. I mean, it's true that in 1980, when gold was very hot and very, everyone thought inflation would go on forever, right at the peak of that market before Volcker tamed it. Okay, in 1980, gold represented 20% of all financial assets, at that time. All right. I mean, gold and Bitcoin today represent less than 1% of all financial assets. So there's plenty of upside here in the sound money stuff, if one assumes that they can never stop printing. And I believe that, with every bone in my body, I believe that. I think other people are coming to believe that, but for our stuff to work, we need more people to believe that. And, human beings do tend to, want to protect themselves. And so, as the word spreads and as the inflation continues to get bad or worse, more and more people are coming to our camp every day. I mean, I can tell you from my point of view, I run a fund, and 5 years ago, almost no new investor inquiries. I mean, it was just dead as a doornail. No one was interested. I mean, rarely a day goes by where I don't get several new inquiries about this stuff. So, as a data point, more and more people are becoming aware, right? I mean, more and more people are being orange pilled. More and more people are aware of inflation. More and more people are interested in gold. I mean, everyone kind of gets it. I mean, this thing is broken. I mean, this $1.7 trillion spending bill, what's that all about, right? I mean, it's just every time you turn around, there's some new monetary excess. 400 billion in student debt forgiveness. Oh, sure. California, let's send out checks to help with inflation. Oh, that's a good idea. Spain just announced they're doing that. I mean, these guys can't stop. They just can't stop. So we're in the right place, but sadly, it's not going as fast as I would like, because we all have limited time on this planet. It's like, let's rip this Band-Aid off. Let's get this over with. Let's just solve it. That's right.
Speaking of wanting it to go fast, what do you make of what happened with Plan B and the model that he put out?
Yeah, I don't like to dunk on anybody too much. I mean, I never dug into that deeply. Corey Clipstein did and said he thought it was all bullshit. To be honest with you, I remember when it was occurring, and I thought to myself, this sounds kind of simplistic, and I don't know if it's realistic. And the saddest thing that I thought about that whole situation was, and you probably remember this too on Twitter, there were guys, younger guys, who believed it chapter and verse, and they levered up their Bitcoin, right? Oh, it's going, Plan B says it's going to 150 in the next 9 months. Great, I got 2 of them. I'm going to put those up for loan, and I'm going to have 6 of them. And then there was a drawdown, and boom, they're wiped out. They lost the 2. And so the lessons there are: 1, don't ever use leverage, and 2, nobody knows what they're talking about, including me. I mean, the future is extremely uncertain, and we are all just kind of grasping around in the dark. And so you never put all of your eggs in one basket. No matter how certain you are of that basket, you diversify. I mean, I can argue that, it's worth having a house, it's worth having some cash, it's worth having some gold, some silver, some Bitcoin. It's probably worth having some commodity stocks and some other stuff, but you just never really know. And so I didn't dig deeply into his model, but it did strike me as a little bit of a, wow, I wonder if this is right or not. And the other thing I've noticed about Bitcoin is this is a really strange financial beast. I've never seen anything trade like this. Do you know what I mean? You probably haven't either. I mean, nobody really who's in traditional finance, we've never seen anything like this. I mean, it does a 5-bagger and then it draws back 70%. I mean, what the fuck, right? I mean, it's like, wow, it trades like a wild animal. And so, and I think that's just because we're trying to put the ocean into a swimming pool, and the pool's got to expand, and it's early days. And I'm sure in the initial days of gold, probably what it was worth. I mean, what it's worth is volatile. I mean, people either love it or they hate it, blah, blah, blah. But, the only way I know how to deal with it is to dollar cost average and to try to be buying at the low end of the Meyer multiple. I mean, I could make a strong argument that says, everybody, I mean, I think you want to hold this thing for the next 20 or 30 years, but when it goes on a huge tear, I mean, if it goes to 150, will I maybe let a few coins go? Yeah, probably a couple. I mean, it's maybe a chance to buy it back cheaper and or use it for something else that looks cheap at the time.
Right. Wow. Along those lines, I'm kind of curious if you've thought through maybe inheritance for Bitcoin.
Yeah.
And
I mean, I intend to leave mine to my kids. It's yeah, I probably won't be using most of the wealth I accumulate in my Bitcoin is my sense. My lifestyle is pretty basic and I don't tend to change it very much. I don't know, maybe I'll give some of it away, but yeah, I mean, look, the one thing that's beautiful about it and gold is that they are bearer assets. And, everyone has their own determination of how much they want to obey the law and how much they think the state is entitled to take their money. But, if ever there was a place where you wanted to be able to potentially give something to your kids, your progeny that the state wouldn't necessarily have to know about, this might be it, right? I mean, that's long been one of the arguments for owning gold coins. You're wealthy, you die, your state's over a certain size, you're going to pay taxes. Well, if the gold coins just kind of happen to be not on your balance sheet, so to speak, and you got some kids, you got 2 kids, you divide the stack in half and you just kind of pass them along. Now, technically that's illegal. I'm not suggesting anybody do it, but I'm just saying that's that has been thought about by many people who were in the gold and silver business. So.
Yeah. I just also wonder, I'm involved. I save in Bitcoin for a lot of reasons.
Right.
And so I have a lot of confidence that Bitcoin will appreciate in purchasing power tremendously. But even if it didn't, I'm very happy with what Bitcoin provides me as a vehicle and a tool.
Me too.
But let's say in the most fantastic scenarios, which I don't think are that, I think they have high probability. But let's say Bitcoin was worth, 10 million a coin or 100 million a coin, something just very astronomical. Do you ever think about the great perils of maybe passing on that kind of wealth?
Oh yeah. I personally, I don't have as good an imagination as you. I mean, boy, if those numbers happen, it'll be crazy. But I mean, I think 1 million is a certainty, in a, I don't know, 5 to 10 year time frame. I think that's almost a certainty. But 10, I don't know. I mean, yeah, I mean, look, at some point, it actually is kind of hard to measure because it really means fiat has collapsed entirely. And so, okay, so yeah, Bitcoin could be $10 million a coin, and in the same world, gasoline could be $1,000 a gallon. Do you know what I mean? I mean,
Yeah.
it's hard to, what it really matters is what's your purchasing power. I mean, I saw a really great chart once that showed how many ounces of gold did it take to buy the average house in America. Do you know what I mean? And so, or how many barrels of oil do you get per ounces of gold? And it's almost like, those kinds of things are almost more meaningful measures because you just don't know what the dollar will be worth. But to answer your question about giving it away or, yeah, look, I don't want to mess my kids up. And if I have that nice problem, I'll figure out what to do with it. And I mean, who knows? Maybe I just die with the keys in my head and I'll donate to the entire Bitcoin community equally. Those coins will be lost forever, right? I don't know.
Yeah.
I mean, that will be a high quality problem, but like everything else, it probably would be a little bit of a problem. You certainly, I think giving somebody wealth that's not earned is generally speaking a bad idea.
Right. Yeah, I can see that. So I have just 2 more questions for you.
Sure.
I know you do CrossFit.
Yeah.
I'm not going to go down that rabbit hole just because I don't have a lot of time, but it's sort of calling to me. I'm
You
getting
gotta
up
do it,
there
man.
in age. I'm trying to get off the bench.
You got to do it.
But thinking about, you do CrossFit.
Yep.
And you're a pilot or a former pilot, but I think you're getting back up in the air soon. I think you just got your plane checked out.
Yeah.
Which I think of those as very different mindsets or activating different areas of the brain than investing.
Yeah.
Much more high time preference. I mean, different kind of risk. You got to act now. You might not have
Well, the flying for sure. The flying is risky.
Yeah.
Big
And I
time.
think,
The CrossFit's kind of long time preference though. I mean, you're suffering in a short time frame to extend your life.
right,
Exercise is really proof of work, right?
right.
Yeah.
So maybe me leaning more on the pilot thing. I think of
Yeah.
my father trained to be a pilot, and he couldn't do the solo flights.
Yeah.
And I've been skydiving once,
Yeah.
and I've thought about it. I couldn't go solo.
That's brave. Yeah. Yeah.
I mean, you got to trust yourself to pull the cord, and
Yeah.
respond and deal with any situations. So I think a pilot mindset must be a little bit different. What is then, combining all those things, your life as an investor? Because I think of it as like, I've done some investing. I've always been investment minding, but it's not 24/7 for me. I'm not always thinking about all the regions in the world, the different kinds of markets and these problems all day long. I'm more in the accounting and finance and operations field. And so there's a mindset there and being a pilot and the high intensity of CrossFit. Is there a Bitcoin mindset?
Oh yeah. Yeah. There's a great Bitcoin mindset, which is it just calms you down and makes you peaceful and makes you hopeful, right? I mean, thank God Bitcoin has been invented. And once you see it, it's just there's like you get into the Zen state. I mean, have you been to well, you went to Bloom, so right? I mean, Bitcoiners are very optimistic and hopeful for the future. And Bitcoiners understand what's broken and they understand that they have the solution. And and we understand that we're kind of on the cutting edge. I mean, it's like it was fun back investing in the internet in 1994 and going, this is going to be big. And that's the same feeling I'm getting with Bitcoin and Bitcoiners. And yeah, the mindset is, isn't it wonderful that this technology was invented, which solves an incentive problem that's existed since the beginning of time, which is that people left to their own devices will cheat. I mean, we're all flawed and we will cheat. And here's a form of monetary economics where you can't cheat. and so once you see that, it's like, I don't know, maybe it's like in the early days, people discovering, religion and Christianity, just, oh my God, everyone's buying into this. We don't have to kill each other. There's actually a higher calling that we're all here for. And so, and I know a lot of people say, oh, it's all crazy and you guys are a cult, but if so, fine. I mean, look, I mean, the early Christians were a cult. I mean, the American revolutionaries were a cult. I mean, to see a better way of living and to understand it and to advocate for it, I think that's a very high calling. And I think Bitcoin is a better way of living. And I think the people who see it, I mean, let me say it a different way. I haven't met any Bitcoiners I don't like. I mean, I haven't. I mean, it's kind of amazing. It's because, I think if you like Bitcoin, it says something about the way your mind is structured in terms of your logical thought process. And so, and there's a certain honesty and humility in it. And if you notice, some of the people who don't like Bitcoin tend to be very arrogant people. I mean, the most arrogant people hate it the most, right? And the people who love it tend to generally kind of be somewhat humble about it and in awe of it. And so, yeah, there's definitely a Bitcoin mindset, and it's a beautiful thing, in my opinion.
Yeah, I agree.
It's a good thing.
So my final question, two parts maybe. Has Bitcoin changed you?
Yeah, it has. I mean, it's given me a lot of hope for the future. I mean, to be honest with you, being a gold guy and fighting the war, and it's you get run down. I mean, you get really, really run down. And I think one of my friends described it to me as here we were fighting these gold wars, and we got these reinforcements. I mean, these Bitcoin guys are charging up the hill with a sharper spear, and we're going to kill this fiat monster. And the gold guys were trying to kill the fiat monster too, but to be honest with you, we weren't doing that good a job. we're getting our asses kicked. And a sailor points out, there's no point in being a martyr. I mean, we want to win. We want to win. We want to, the system's broken. The wrong people are winning. Let's crush these assholes. And and so Bitcoin has given me great hope and conviction that we will. in a reasonable time frame in my lifetime. Whereas pre-Bitcoin with gold, I was always a little, dubious. I mean, it primarily just because, we were getting punched in the face for a long time. So yeah, Bitcoin has definitely changed me in a very good way. Yeah.
So are Bitcoiners lucky bastards?
Oh yeah, absolutely. We're all lucky bastards. Totally. I mean, we don't realize it yet. These will be the good old days. I mean, these will definitely be the good old days. And we're totally lucky bastards because we're going to win. And we see something that nobody else can see. And the world is going to move our way. And, we're going to be rewarded for it. And, hopefully we won't become assholes as a result of those rewards. We'll be humble about it. Remember the hard times. Remember what got us here. Remember to be generous and understanding and help other people to see it and understand it. And, it'll all be a good thing. And that's what I hope anyway.
Lawrence, I've enjoyed this tremendously.
Oh, me too. Like I say, I do kind of ramble on. I know. I hope it's what you were looking for.
It was exactly what I was looking for. Like I said, I really enjoed it.
Likewise.
I'll leave it to you for any parting words. It's like,
no parting words. I mean, I would just say, these bear markets stink. Take a very long-term view, chin up. We're going to win. And, it's a pleasure to be involved with Bitcoin, and everybody who's a Bitcoiner is my friend. I say that everywhere I go. I mean, if you're into Bitcoin, you're in the right side of a moral battle that's being fought, between people who are greedy and people who run a broken system, and those of us who know that we don't have to behave that way. And so, I respect immensely everybody who's in this battle fighting to try and make the world a better place. And we're going to do it. It's going to happen.
How long have you been on Twitter? Because I've only seen last year and a half. You kind of
maybe I've amped it up a bit. I mean, I think I got on in 2017 or 18. I don't know. It must say on my profile when I joined. It was 2017. I got on it. It's interesting. You can learn a lot, and then I use it. What it really is for me, it's I just every day I am outraged by what the central banks do and how broken the system is. And so Twitter for me is therapy. I get to bitch about these assholes, I mean, and I'm bitching to the choir who agrees with me. So that's very satisfying to know that, I mean, they're, in anybody's individual sphere, it's very easy to feel isolated. You talk to people and they say, what the hell are you talking about? Sound money? What do I care about that for? You know what I mean? But those of us who have gone down the rabbit hole, we all get it. And so it's very reaffirming to be amongst people who get it, and that's what Twitter provides for me anyway.
Yeah, well, awesome.
And for you and all your followers and stuff. So I really thank you very much for having me on your show. I really appreciate the venue and the audience and getting to know you. I hope we'll see you at the next Bitcoin conference.
I'll see you at Bitcoin Day Naples.
Yeah, exactly, down in Naples. Yeah, it should be good.
That'd be great. Thank you so much, Larry.
Okay, thanks. Take care.
Thank you so much for checking out this episode. Again, make sure that you're subscribed to the Bitcoin Matrix podcast so that you don't miss out on any fresh and new content. I'd love to hear your feedback. Leave a comment or send me an email at cedricyoungelman@gmail.com. Thanks to Lawrence Lepard for taking the time to come on the show. I also want to thank our sponsors, River, CoinKite, the Bitcoin Conference, and CrowdHealth for powering the show. Huge shout out and much appreciation to those of you who are streaming and boosting the show for sats on the Fountain app. The boost legend, Eric99, again, boosted my rip with Michael Goldstein, aka Bitstein, 50,000 sats and wrote Stay Humble, Stack Sats. HGQ39 boosted the show 5,000 sats and wrote Just Found This Podcast. Keep up the great content, Bitcoining in New Zealand. Mixmaster Mikey B boosted the show 1,000 sats and wrote Always a positive show. It's true that once you become entrenched in the space, you can't go back to thinking in the old methods you used to. The world will become more sane and hopefully kinder. Your continued and consistent support keeps me going, my friends. Susie BDDS, Alexander Leishman, Eric Caseman, Greg Zaj, Clemenza from the Meat Mafia, Robert Malta, Nozomi Hayesi, and Eric Weiss are up next. Stay humble, stack sats, and get laser focused out there. This is Cedric. Peace.